Hey, this is Anthony, parent of Virus Medic, and in this video, I'm going to go over the employee retention credits. And there is just a lot of confusion on this, and there's a lot of press releases going around. And you know how I think I found the answer to sort of the things that you're looking for. And a surprising answer, it actually comes from the law, and I think that really explains why we have so much confusion about this. And so let's get into this. Um, why ERC credit qualification is so incredibly difficult, and we're going to take a look at the law there. So anyway, let's go to the next slide here. What is the ERC? Let's just very quickly. It's the employee retention credit, and it's available against applicable employment taxes. That is employer share of Social Security, but it can be up to $7,000 per employee per calendar year. So these can be huge. They can be huge and really bring your business around. So the temptation to get this credit is huge, right? And well, there's a lot of people out there who are claiming that you can claim a credit, and the IRS says they're going to crack down on people who are making these. Here's one such firm that here on my presentation. This one firm, Zachary Bassett and Mason War, and their firm, COS Accounting and Tax LLC, DBA 1099 Tax Pros. They're challenging an indictment of $11 million in false and fraudulent ERC claims. The IRS claims they're going to be they suspect a lot. They're going to audit a lot of claims. That's what they say, at least. And then there's other problems that have gone on. There's been rule changes creating confusion, and one of those is that there is now double dipping allowed with your ERC. So here's the big problem, and this is, let's get right to the heart of it before we kind of confuse the matter. We're going to go to the actual law, and here yourself, you are going to see the problem yourself. And the law is located at 26 USC 3134. And so this law was passed in 2021, I believe, and this is when it was last amended. But here's the problem that you have with it. It says eligible employer. Okay. Term in general, an eligible employer means any employer, right? That's not really the problem, but it's this. What is an eligible employer with any respect? And it's really this first section, section 1, or maybe that's big I. Who knows what it is, right? No, it's section 1, big I, and this is what it says: an eligible employer is someone where the operation of their trade or business described in clause 1 up here is fully or partially suspended during the calendar quarter due to orders from an appropriate governmental authority limiting commerce, travel, or group meetings for commercial, social, religious, or other purposes due to the coronavirus disease 2019. Okay. Now, a lot of people are going to say, oh, that's not the test. No, that is one of the tests. There is the other test, which is very straightforward. It's if you have an 80% gross revenue decrease from calendar year 21 to 2019, then you qualify easily. Now, that's the easy one to figure out. So if you do have that, you qualify, claim it. It's this whole thing in the middle here where the law sort of just gives like any business operating during COVID that was fully or partially suspended during the calendar quarter. Well, partially suspended, what does that mean exactly, right? Because it seems like everybody who wouldn't qualify, right? Here it is. You know, this is the easy test right here, the 80% test, but that's not what we're talking about. What if you didn't experience a revenue drop? What if you actually had more revenue? Could you still qualify? Well, you know, the law really seems like you could. An eligible employer, let's go back again, where the operation of the trade or business described in clause I, little I, is fully or partially suspended during the calendar quarter due to orders from an appropriate governmental authority limiting commerce, travel, group meetings for commercial, social, religious, or other purposes due to the coronavirus disease 2019. Well, geez, again, who hasn't satisfied for that? So I would say most employers actually would probably meet this. Now, here's where we're going to get to sort of the problem, and I think how to address it. Really, if you look at 26 USC 3134, it's a huge giveaway, right? They wanted that bill passed so fast they didn't really define things or think about it, and maybe they actually did want to give a credit basically to everybody who was affected by it, and even if you didn't have a revenue decrease, it doesn't mean you weren't affected by it. So the response from the IRS is there. It seems like they're trying to rewrite the bill to get rid of that massive giveaway that said if you've been affected by a partial government shutdown. So they're trying to sort of bring it back from what Congress allowed, and their regulations can really do a lot to do that, and often the regulations are the law, unfortunately. But let's just say the law itself says you can get it. So we see the IRS, a lot of threats and intimidation. They're saying, hey, there's a lot of fraudulent ERCs coming around. We're going to come after people hard. But I can tell you the IRS has threatened a lot of things that have never happened. So maybe it will, maybe it won't. And then what they're also doing here too, and I noticed this sort of regurgitation of it, the IRS claims that these ERC outfits are scams. I don't know, maybe some of them are, and maybe it wouldn't be exactly how I do business, but it looks like they're taking the law and they're applying it. Now, I could tell you what they're doing wrong, though, and where I would do things differently from them, vastly differently, because what they're doing, you could actually see what the IRS's objection is if you read their press releases. Because when we get down to what should you do, right? What should you do? If you had a revenue decline of 20% compared to 21 to 19, I say easy, claim it. You qualify for it. You meet that bright line definition. It's objective. You qualify for it. Claim for it. Claim it. But what if you didn't, right? The thing is, the law doesn't define what it means to be partially suspended, and the IRS guidance is really, really limited. And the IRS has provided incomplete guidance on this as it is now. And you really can't figure out, well, what do you mean by a nominal portion of the business? And so I think there's a way to address this. And again, your choices are if you don't claim the ERC credit and it's huge, well, you're putting your business at a strategic disadvantage, aren't you? Because your competitors might be claiming that credit where you're going to take the high road and not have it, and then put your cash maybe in a tough situation. Or do you claim the credit that the law seems you can claim, but the IRS claims the law doesn't claim you can claim it, right? Do you go to the law or do you go with what the IRS says? And I said, well, I think I would go with what the law says, and here's why. Because that section I says, if you have the facts and circumstances for the shutdown, actually go through the analysis. Because if you look at the objections from the press release the IRS has on these ERC firms, it's that they're saying everyone qualifies with no specific analysis to that particular business. Okay. Now, here's the thing. I will say, yeah, everybody qualifies, but that's not probably true. Not every business had their business negatively impacted by by a partial shutdown. Not everyone. I would say hospitals and their nonprofits, they still qualify for ERCs. But hospitals might have a harder time proving that the shutdown hurt them when, well, they actually didn't shut down, right? They were open the whole time. They were the ones who were open. And I would go through the analysis. I'm like, yeah, I don't see how a hospital would satisfy. But okay, well, what if we had someone who was an engineering firm? How about that? How about an engineering firm in Vermont? And this engineering firm didn't experience a revenue decline at all. Because people moved up from New York City and needed their houses improved. And so actually business improved. Could that person still qualify for an employee retention credit? And I would say, well, let's think about this. Maybe, because what could have happened if your business wasn't affected by the partial shutdown? Your business. I'm not talking about the other people, but your business. Was your business shut down impacted in any way? Maybe you could have made more money, is the point, unless you were limited. So that's actually the step. So what I would do is, if I was somebody in that situation, it's something I would investigate. And if I was going to go through that, I would make sure I protect my claim by at least going through the analysis and putting up some solid things that are specific to my business, to my particular business, not my industry, but my business. showing the very things and making sure I had those. And if I didn't have anything that showed that, then I probably wouldn't file it. But if I could satisfy myself, at least to say, here are the facts and circumstances fully developed, articulated, that show my business was, yes, impacted by a partial government shutdown, then I really might consider going for that. Now, the thing is, and this is sort of the thing, if we apply a little game theory, I mean, we know things. We know the way the IRS works. The IRS is going to audit the ones with no support. And those ones are going to be hard to defend because at the time, the people didn't do that. Now, I would say those people are going to be out of luck because now if they're challenged, they'll have to now go and prove how they fit into Section I. But again, that's hopefully not you because you're going to go through your detail analysis. And this is the thing, when you have something signed off by a law firm, a lawyer saying, oh, here's the detail analysis. Think about it this: you're an IRS employee, and you're trying to blast out as many cases as you want. You have a statement written by an attorney. Okay, looks pretty good, supported by the law, and then you have there's nothing here. There's nothing on the other side. This one has nothing. So the one with zero support is the one you want to audit. The one with a lot of support, ooh, that sounds really time consuming. Let's refocus our attentions on the other one. So that is really where I would say, and the way to look at this is if you can support it, if you can come up with a basis that makes sense, you might want to go for it. Now, there's something you might want to do to protect yourself. You can claim the credit and set it aside should the IRS decide to reverse it. And quick repayments of things you're not entitled to can reduce penalties risk substantially. And really, in this case, your fault is following the law of which the IRS gave incredibly little guidance on. So you kind of have to understand that threat. Whereas the IRS, they make a lot of threats, but again, they want to go after the easy cases first. And it seems like to me, they already identified their easy cases, the ones that did go to some of these promoters. They know who did it, and the ones who offered no support, those are the ones they're probably going to attack first. So there you go, guys. I think that explains it, that pretty much any business that had a partial government shutdown could potentially apply for the employee retention credit. And I would say it's really something you want to investigate thoroughly because it's a lot of money you leave on the table. If, however, you did file that and the IRS is auditing you, the reason why is you probably didn't develop that factual basis why you qualified, and that might be the problem you're running into if you are getting examined. And I would say this: contact us if your business needs experienced tax advisory services. I'm a 20-year tax attorney, and we've been helping out people with all sorts of tax problems since then and getting them resolved, and we enjoy what we're doing. Go to irsmedic.com to learn more about us, and we'd advise you to subscribe to this channel for more updates as they come up. This is Anthony Parent for Iris Medic. Thanks for watching.